good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. All right, without delay, we're going to get right into the charts. I got a lot to cover, so let's go right into it. All right, right off the bat, what do we have here? We have the key top headlines. I know a lot of you guys appreciated this yesterday, so I'm going to stick with it. I think that, again, going through these very short order gives you a rundown of everything from basically yesterday, the market's closing, all the way through today as of right now live. All right, so top market blast. UK inflation yesterday, or in the overnight, kind of this morning period, coming in at 4%. That was higher than expected. It was driven by airline increases in fares as well as tobacco. But the key here is that you're starting to see a little uptick in inflation in various places. Last week, we saw the CPI data uptick, then the PPI was down. But again, watch to see what happens as these commodities continue to trade. Do they keep pressure on inflation, which ultimately makes it very hard for central banks to cut aggressively? Not going to say they can't cut a little bit. They'll throw the market a bone, right? But can they cut down to levels that the market wants? Next up, China GDP came in lower than expected. This sent the Hang Seng market sharply lower in the overnight. The Hang Seng was down 3.17% to a new 52-week low. So talk about apples and oranges. The U.S. stock market very close to all-time highs. We have the Hang Seng market at 52-week lows. China is not in a good place, even with them doing stimulus. Okay? The next thing that I think I'm paying attention to this morning is Iran fired missiles that hit inside Pakistan's borders. All right, so we talked about how there's a lot of kind of angst going on here. The Middle East continues to have kind of little mini eruptions that are potentially going to spread into a much bigger conflict. This, again, is very key. Pakistan called it an unprovoked violation of its airspace. And again, this is just one more potential headache for that area of the world that could spill over into a much bigger conflict. Apple and Tesla are weak today following those same China GDP numbers we just talked about. Think about this. We know that a massive amount, like 50% of the revenue that Tesla earns comes from China. A huge amount as well from Apple. So any sort of continued really bad negative vibes there or economic data, GDP number in this case, that is going to be negative. Nvidia and AMD continue to show relative strength. They were amazing performers yesterday. I think AMD was up over 8% on the day. It is approaching a double top. We're going to look at that chart in just a minute. There might be a shortable opportunity coming up in that trade, all right? Continuing on here, we have retail sales coming in. This was just released at 8:30 a.m. Eastern time. They came in better than expected. So the consumer, who's laden with more credit card debt than ever, over $1 trillion, hitting new highs consistently. The consumer is still spending. They're just running up more debt. Kind of sounds like our government, right? Our government continues to do the same thing, passing new spending bills and all this. And again, we see that debt for the U.S. obviously pushing above 34 trillion. Lastly, just in relation to retail sales, the Dixie, the DXY, which is the U.S. dollar, it did start to uptick on the back of those retail sales numbers, as well as the 10-year yield. Why? Why are retail sales that are stronger pushing the dollar higher as well as the 10-year yield? And the answer is pretty simple, right? The stronger the consumer is, the stronger the economy is, the less likely the Fed is going to aggressively cut rates. One last thing. Yesterday, it was around 10:30, 11 a.m. in the morning. Federal Reserve President Waller came out and basically said, hey, listen, guys, we may not cut more than once this year. That may be it. We may just cut a couple times. We have no potential predestined level of how many cuts we're going to do. As long as the economy stays strong, we have no reason to cut aggressively. In addition, one of the keys to that, right? So it's one thing to have a Federal Reserve official saying something. The bigger factor here is that the market began to price in no rate cut in March. Remember, up until now, for the last multiple months, it was first rate cut in March. March 31st, I believe, is their meeting. Now, the market is pricing in the first rate cut in May. So that is a significant change. That is a change from what the market is expecting. Remember, the market's pricing in 5 to 6 rate cuts. The Fed has said 3. Now we're starting to see the market might be starting to move towards what the Fed has projected. Okay, let's take on another look here. I want to get right into the charts and get into the action here. If we take a look at the 10-year yield on the charts, what is the 10-year yield doing? It is now at 4.1%, right? So again, we have uptick just a little bit. Yesterday, we moved up as well. Obviously, the move up yesterday was a majority on the back of those Federal Reserve President Waller's comments. By the way, there are 2 new Fed officials speaking later today, so just be ready. There could be some comments in there that create intraday volatility in the markets. But again, what we can clearly see is that we're continuing to push up. I've gone on record now for the past multiple weeks, if not longer, that we will eventually move back up. I have a couple levels I am watching here, okay? So let's talk some levels here. The first level that I'm looking for is a target on the 10-year, which again, it might be a significant one, we'll see, is 4.33%. Notice again, clearly shown, pivot high right through this area right here. You have a little high there and a kind of a kiss care before it broke out and created this kind of M top. Then we also have this flatlining area right here. So that should be a significant resistance at 4.33%. If it pushes through that level, where would be the next level that we would go to? And that answer is pretty clear. It's right to this level. This is kind of the one I've been saying was the max upside on the 10-year, and it's right around 4.55%. So again, this would be target 1. This would be target 2. I think this one is achieved relatively easily. That's in almost any scenario that I'm looking at. That one will be achieved. This one is a little bit more unknown. This is going to be more about, does the jobs number stay strong? When we get the jobs data at the end of this month, is it still strong jobs data? Do we see jobless claims will be reported tomorrow? Do they stay very low, people filing for unemployment, right? That'll give us a better insight into that. The stronger the economy stays, the more likely we move up on these towards the second target, not just the first target. All right, again, today at least, the uptick in the 10-year yield, that is coming directly on the back of the retail sales numbers. So very clearly, we could see we were just chopping in the overnight here, right? And then here's where your retail sales came out, and there's your pop on the 10-year yield on the retail sales front. All right, so again, and I want to be clear about this, guys, not to get distracted from the charts, but I like to do these little kind of side note pieces here. And what we have to understand is that the house of cards continues to be built, meaning that it's debt upon debt upon debt, debt after debt, whether it's on the retail side, meaning the consumer side with credit card debt where it is, whether it's all these loans on automobiles, whether it goes up the next ladder to the pension funds and to other things out there, the commercial real estate market, which is crumbling. Then it goes even higher to the government level, not only state, but then the federal government. And this is a house of cards that it can last for a long period of time of success. But ultimately, we have to be aware as citizens that eventually this house of cards collapses, right? And that's kind of that reset that I've talked about. I haven't honestly went into this for a long, long time, but it's one of the resets that I think will eventually happen later this decade when you get towards that 100-year cycle of the Great Depression. And again, I'll get into cycles again at some other point, but that 100-year cycle probably coexists with that reset, that massive reset where everything starts tumbling down, and ultimately what emerges will be a much more functional financial system, a checks and balances system, a system that is much more based on a slow expansion of a monetary supply, not endless printing of money by bodies like the Federal Reserve or the government. It'll be stated. It will be in the Constitution. There'll be amendments put in my opinion, that will keep the fiscal house in order no matter what. Because again, it's important to recognize that just like a life cycle, cycles in economics, there's ups and downs, right? I mean, we all have our ups and downs. You have your ups and downs with health. You get sick, you get better. You know, you have your ups and downs in wealth and all of this type of thing. And that's the same thing. You have expansionary periods and you have contractionary periods, and you have expansionary periods and contractionary periods. So just going to that, and again, just talking about that and not to get too sidetracked, but essentially this is what happens, right? The idea is over the longer term, you have a gentle kind of slow grind up in economic wealth, and that's what ultimately happens. what we've seen since really since 2000 with the dot-com bubble, when the Fed started to get more involved, but even more so, they got massively involved when the financial crisis hit in '08. But this is what we've had, basically. We went through the 2008 level. Let me erase these lines so we can kind of start over here. But basically what we did was we had our Great Recession, and then it's been like this, right? It's just been a long, long expansionary period that keeps going and going and going. And sure, you have your blip of COVID, right? I mean, that's not something that can be predicted necessarily. But obviously, what did the government do? They printed even more money. And what did the Fed do? Even more money, right? So it just kept that expansionary period going up, 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 up. And you're not getting your natural cycle of a downturn. And this is, by the way, I'm getting so sidetracked here. But again, that's partially that. In fact, it's not just partial. It's a majority to be blamed on our political system. The fact that people that are up for re-election every 4 years or whatever, they don't care about where the economy is in 20 years. All they care about is when they get re-elected, have they pumped enough money into the system to make the economy good? No one wants to go up for re-election when the economy's tumbling, right? And so it creates a system where you have these periods where if you had, let's say, a term limit, for instance, then it's like, okay, listen, I can't get reelected, so let me do what's better for the whole, for the long term, not just the short term. All right, anyways, guys, I digress. I don't want to get too off track here, but that's ultimately the house of cards that's being built, and a lot of it has to do with the political situation. We know the craziness that's going on right now. All right, looking at the dollar real quick, the dollar continues to move up here. We have bull flag here. I talked about that yesterday. Your bull flag breakout continues. Where are you headed again, guys? Simply put, I gave you guys this level yesterday. Let's bring up my trend tool here. We put it right at this high, drag that line across. That is your target level right there. So again, what we're looking for is approximately 104.20 or so on the Dixie. Again, that will be short-term resistance. We're really not that far away, about 75 cents on the Dixie away from that level. All right, next up, let's take a look at the S&P 500. Not much new to report. Yesterday was a down day in the S&P, but the only thing I care about really at this point is this area up here and up here. Now, if we break above this area, right, if we do break above 480 on the spiders, all right, that signals to me that we will move up and pierce 5,000 on the S&P 500. As long as we stay below this level, then that's resistance, and I have to respect that resistance as a technician. Doesn't matter what I think or feel. It's ultimately, that's resistance. Until it's broken, it's resistance, right? So that's just another key thing to remember. It doesn't matter what you or I want. The charts will do what they want. All we can do is read the charts and see where support and resistance are. All right, so one thing I am watching, I do have a level where I think if to the downside we break, we start to get a bigger corrective move. That level here, if we zoom in on the daily chart, is very easy to see, and it's an actually pretty remarkable trend line. Take a trend line, connect it right through these 2 points. So pivot low to pivot low, extend that out, and look at what we get. We get the exact low right over here. So pivot low, and it touches perfectly this low. So what we can see is we're kind of creating this little wedge pattern, right? You know, you have a definitive wedge pattern here. If we start trading on the spiders down here, that would signal a bigger move to the downside. As long as we stay in here, you could go either way. Really, to be honest, you could go either way, and you probably put the camp of upside because that's been the general trend of the market for now, basically a year, right? But this is a level I'm watching. It's right around, let me get you a price point on that. Currently, it's around 470 on the SPY. So if we have a daily close with a confirming move the following day below 470, I think that's where you start to get much more bearish on the markets in the near term. All right, couple stocks I want to go over. I've talked about Boeing here. Boeing, big drop yesterday, now down 25% off of the recent highs of 3 weeks ago. That is a remarkable drop. Insane areas of support right here at 197, right here at 190. I even thought maybe this gap fill would hold yesterday. Didn't really hold, frankly. But again, I started to accumulate yesterday. If it gets down to this level, I'll accumulate more. If it gets down here, I will accumulate more. This is a swing trade for me. It's not a long-term investment, although again, if you guys are long-term investors, that's up to you. but I'm just telling you what I'm looking to do. And for me, I'm looking to accumulate in this range here for some sort of snapback, maybe here, maybe right up here. Nothing too crazy, but a good 10% bounce would be appropriate and not very unusual considering the massive drop we've had. Nvidia, amazing. It is going slightly negative, at least last I checked. It was initially higher this morning again. Now, the one trend line I'm keeping an eye on here, guys, goes all the way back to May of 2022. Pivot high here, pivot high here, pivot high here. We just pierced it yesterday. So this could be an interesting level on Nvidia, but we don't know yet. I'm going to watch to see the price action. Nvidia, incredible run from $475 basically to $575 in just basically, what is that, 5, 6, 7 trading days. It is a remarkable move on Nvidia. Why is Nvidia and AMD doing so well? I have a thesis on this, or a hypothesis. My guess is that Apple is no longer the golden child of the market. You know, whether it's the China GDP numbers or cutting iPhone prices in China, it is now moving into the second tier. We've seen Microsoft move into the first tier for market cap wise. People are pulling, big funds are probably pulling money out of Apple. They've been overinvested in Apple for a long period of time. Where is the golden child? What's the new golden child in the market? And the answer is it's Nvidia and AMD to a lesser extent. And sure enough, that is. And I said I would go over the AMD chart real quick here, guys. So let's touch base on that. AMD classic double top. This might be a quick swing trade short. You have it right up here around 164 area. We are at 158.74 as of now. So you're still about $6 away or so, or $5 and change. If we push up, that would be technically a double top. You would assume a pullback would ensue off of that level. All right, next up, let's talk about Tesla real quick here, guys. Tesla yesterday kissed my technical level of support right here. Got a little bit of a bounce. It is down today, though, so let's watch to see. As of now, I'm not a buyer of this level because, again, it bounced yesterday. For me as a technician, as a disciplined trader, I like first hits of levels. Once it bounces, the trade's over, at least on a swing trade or day trade basis. Now, again, might be a different story for long-term investing, but I would still caution people. Again, some more margin compression. We're seeing the wars on EV accelerate, meaning that people, all these companies that are producing EVs are cutting their prices to try to undercut their other players. That is ultimately going to hurt Tesla. Doesn't mean it can't be good for a bounce here and there, but you have to be a little bit nimble. Here's your chart of the Hang Seng. Take a look at this, guys. Again, the Hang Seng market, there's a couple things, and this is the China market we talked about at the beginning, down 3.71% yesterday. But look at the downtrend it's been in since the beginning of 2023. Incredible move from like 22,500 all the way down to 15,276. A couple reasons to kind of think about this as a potential trade. One, if we put a trend line connecting these lows here, so I'm going to draw a line right through here, bear with me. And if we draw this here, we do, in fact, it's a little bit off right there, but right here, you have a connector from this pivot to this pivot, and then we just start touching this lower pivot right here. So this one to this one gives us this exact low that it hit last night. And then the last thing to keep in mind is that we really do have, as a secondary potential factor here, we have this double bottom coming up, which is from the October low. Excuse me, there's the line. From this October low right here, would be right down around 14,785. So we're still about, what, 500 points away from that double bottom, but that would be a double bottom level. Now listen, China has a lot of problems. We know that. So it's obviously very, very high risk, but something just to keep in mind. All right, back to center screen here, guys, real quick. We're going to take a quick 30-second break to just talk about Lux Algo, guys. I told you last week I am working with them to develop multiple trade signals that are going to be on Lux Algo, and they are kind enough to sponsor this stream, this show. So let's give them our full attention, and I thank them so very much. Take it away.
Have you considered enhancing your trading experience? We have an amazing tool for you. Lux Algo creates next-gen trading indicators to help the world understand the markets in a smarter way. They have the largest user profile on TradingView and are the only official Discord partner in the technical analysis space. Lux Algo Premium operates seamlessly with top platforms, such as TradingView and Discord, making it the perfect tool for every trader. Take your trading analysis to the next level with Lux Algo. Please visit the description below and sign up for Lux Algo today.
All right, guys, let's get right back into it here. Take a look at Bitcoin. Bitcoin had a little bit of an up day yesterday, a little bit of a down day today. All I'm doing, and I like to keep things simple, you guys know that, right? But all I'm doing here is watching a trend line from here, right to these lows, all along here. Okay, now we're still holding this level. So that, if you're a bull, that's what you want to see. You want to see this level hold, and you want to see price move back and retest this high pivot. On the other side, what do you want to do? Like, what do you have to be aware of? And what I'm watching, and I'm continuing, and I went over this in yesterday's stream about bear flags. I talked about an immature bear flag versus a mature bear flag. Right now, this is still considered an immature bear flag, but it is more mature now than yesterday. Every day that goes by, a bull flag or bear flag will mature because you get one more candle. And right now, we got yesterday's candle and today's candle, and what we have to watch is, are we starting to make this sort of pattern here on the charts? Now, the fact is that an immature pattern basically tells us that probabilities of it playing out are less likely than a mature pattern. So right now, it's still kind of in that gray zone. Will it pop back up here, or will the bear flag continue and break down like that? And again, as a technician, that's exactly, like, if you want to know what I am watching on Bitcoin, I'm watching this trend line and the potential for the flag pattern to break. If that happens, 38,000's on tap. If it holds and starts to move up, that would be very, very, very bullish for Bitcoin in the near term. All right. So that's just a quick rundown there. I just want to show you the Ethereum chart. I know you guys generally like when I go over Ethereum every once in a while. The only thing on Ethereum that I'm paying attention to, guys, is this beautiful channel. I got to show you guys this because it's so freaking awesome. I love channels and I love charts. So all I'm doing here is I'm connecting all of these lows, right? So all across these lows, that little upsloping line, I drag a parallel right up here and look at the high on the chart of Ethereum. What did we just achieve, right? So you have the lows here, which I talked about. That was the initial, right all the way through here, that trend line, perfectly parallel to that high. What does that give us? It gave us that high. So right now, as of Ethereum, you're trading within a channel, an upsloping channel, but still you're within a channel. So we know this is resistance as of now. And if it were to fall, I mean, you'll have support here, you'll have support here, you'll probably even have some support here, but this would be your max downside right here. That would be actually where I would be a buyer. I would absolutely love to grab some Ethereum if it ever got back to, let's say, 1,700 or so. But in the meantime, you just watch that channel and see how it kind of progresses. Next up, let's talk about natural gas, guys. Because natural gas, I gave you guys a level on this one, right? So if we look at natural gas, I said start buying when it gets close to 250. All right, well, yesterday, or in the overnight, I should say, we actually hit 252. And I want to show you why. And this is, I mean, again, I talked about this level literally going back a week when we were at the highs, that this is the general area that you'd want to start looking at it. And the reason it is because it's a very clear retrace. So what you have here on the chart of natural gas is you have this pivot point here, right? To here, right through all of these tops right here. I still remember being in the trade on natural gas long and saying, all right, guys, if natural gas can break through here, you'll get a big run. Well, we sure got that big run. But then the question is, can it retrace to the scene of the crime? This was your breakout level. There it goes. Now you retrace. And it basically kissed it in the overnight. Now, again, that was in the overnight. Not a lot of us could be a buyer of it unless you're into the natural gas futures. But if it starts dipping back down to 250 today, I will start to nibble on natural gas myself. Pretty cool chart there. All right, quick little heads up on gold here. If we look at gold, gold is just continuing to chop just underneath this big trend line here. A little bit of a downward move the last couple days, but nothing to get my attention as of now. The dollar's going up, therefore gold is pulling back a fraction. That's fine. I still think we have a big breakout coming on gold in the not too distant future. Lastly, on oil, guys, again, oil's still stuck in the same range. It's down a little bit today. Potential inverse head and shoulders, but like I said yesterday, hasn't broken yet, so you do nothing. If it breaks, breaks, it probably goes to about $80 a barrel. If it stays in this range, it could easily break down just as easily as it could break out. So it's which way does it break? Breaks below 68 to 67, I think you go to 60. If it breaks above 70, let's say 73, I think you actually start moving towards $80 a barrel. All right, center screen will go. And again, guys, as always, I got to get to my trading room. We got to see what the action is today. There's plenty of action out there I'm already seeing. So as always, guys, thank you so much for tuning in. I hope you found this insightful, helpful. And again, your comments, I read them. I comment most of the time as much as I can. I do thank you so much. Have a good rest of your day. Take care.